Good day, everyone. Hello. Welcome to this webinar organized by the DCED on catalyzing system change to strengthen enterprise support organizations. As you may know, we had a seminar on ESOs already in March. This is a bit of a follow-up to that to deepen this topic. And why do we sort of give so much attention to this? Well, the DCED, so the Donor Committee for Enterprise Development, had its annual meeting last week. So we come fresh back from that, sort of with assessment of the key trends in development assistance. One key term that came back time and again is change a grant mentality into an investment mentality. ODA is going down. We want to leverage more private investment. And the moment we want to do that, we need enterprise support organizations to work with SMEs to make them grow and make them investable and bankable. And then, of course, the questions come up, how do we make those ESO as effective as possible? The webinar in March spoke about sort of results-based payments to incentivize ESO to be very client-oriented and efficient. We'll hear a bit, we hear back from that a bit in this webinar, but also we sort of we want to share more insights from research on how to more systemically make ESOs stronger. We have 4 people to speak to this topic. I will let them introduce themselves. Before I give over the floor, maybe one short comment. We have a chat box in which you, as participant in this webinar, you can introduce yourself. And we have a Q&A box. So the Q&A box is really for asking the questions you want the panel of people to respond to. And the chat box is so that you can introduce yourself or share other materials with the people in this webinar. So please sort of stick to that division of use a little bit. And on that note, I want to sort of hand over the floor to the moderator of this session, Aurelia Molino from Pollinate Impact. Over to you.
Amazing. Thank you so much, Harold. It's lovely to be here. Really excited to see all of you and share a little bit about what we've seen in this impact incubation space. And if you haven't interacted with Pollinate Impact, we like to start our activities with a quick check-in question. So I'm just going to put this in the chat box because I know we have a lot of folks on the call. So the check-in is, what's a piece of advice or feedback you've heard more than once? Or just one that you've heard recently that you really like to share. So feel free to put your advice in the chat box and share that with everyone else. I'll share one that I have heard recently that also has kept coming up was a closed mouth doesn't get fed. And basically it means you should ask for what you need, otherwise you're not going to get it if you don't ask. So I really like that one. So I'll just share that, but would love to see your responses coming in over the chat. Great. So I am supposed to take about 5 minutes to set some context here around, sorry, I'm going to turn off those dings, around our work with impact incubators globally. So Pollinate Impact is a member-led network of impact incubators across Africa and Asia. So together we are really transforming the incubation industry to realize our vision, where impact incubators thrive and the entrepreneurs they support are really building flourishing businesses that create positive social and environmental impact. So my name is Ariel Molino. I am based in Nairobi and really, again, happy to share some of these insights with you. So I will just pull up my screen real quick. Sorry about that. Too many windows open. All right. Okay, here we go. Share, and I'll just go to presentation mode. Great. I hope you guys can see my screen. Great. Thanks, Julia. Great. So just a little bit on why we do the work that we do and why impact incubators are important. So I think I'm probably preaching to the choir here, but despite the really critically important role that incubators and accelerators play in the entrepreneurial ecosystem, they very often receive the least support and operate under some of the most restrictive funding mechanisms. So you all, and when I say incubators, I say that loosely, when I'm including incubators, accelerators, venture studios, whatever you want to call yourself. Um, they have one of the toughest jobs on the planet, and yet they remain largely unrecognized, underappreciated, and very much underfunded. And what we've seen at Pollinate Impact is that many of the challenges that our incubators are facing doesn't really matter if they're in Manila or Mombasa or Mumbai. Many of these challenges are very similar in terms of financial sustainability, in terms of getting the right talent, and I'll move ahead. When it comes to sustainability financially, right, there are limited avenues that impact incubators often have to experiment or innovate because, again, their funding tends to be very restricted to the programs that they're operating under. That really struggle to attract and retain quality talent to deliver high quality programs, right? These are knowledge-based businesses that are working directly to support impact entrepreneurs. And really that tension between their desire to deliver customized programs based on the needs of their entrepreneurs while dealing with the reality that many programs that they're running are funded for very short periods of time, and there's always sort of that tension between quality and quantity. So very often these tensions and these challenges are far deeper than what we can often see on the surface, and it's really a tangled web of these challenges. You pull on one tension over here, and it affects everything else on the other side, right? So they're highly interrelated, and very much deeper rooted issues that are at a systemic level that a single incubator accelerator may not be able to address independently. And that's why we take a community and member led approach to addressing some of these challenges. Um, and I think one of the biggest tensions, and I know this next slide really has a lot of words, so I'm not gonna read into detail on this, but incubators are very often caught in the middle of varying stakeholders with different expectations, right? So it's no wonder that they struggle to satisfy everyone. It's impossible to make everyone happy when they're being pulled in many different directions, right? So you have your entrepreneurs who have their own expectations about what they want from you. You have the impact investors who you hope and pray are going to take the entrepreneurs that you have supported. And then you have the development institutions and funders who very often are funding programs to get run, and they have their own expectations around what sort of development outcomes they're looking at, and sort of the tick boxes that they're looking to check also. And this isn't even all of them. I mean, there's government institutions in there. There's, if you look at talent providers and universities and things like that, the list can go on. So being pulled in many different directions really create a lot of resulting challenges for these incubators to thrive. So all that is to say, we need to empower impact incubators to be able to deliver effective, efficient, and relevant programs for the entrepreneurs they're serving. And this is not going to happen overnight. It's a long-term game. But the first step is admitting that the system is broken. I'll be the first to say it. I think everyone here can attest to that. And we need to build a new system with new rules, new behaviors, new structures for our incubators to thrive so that their entrepreneurs will subsequently grow and thrive. So I will stop there. I had 5 minutes and I could talk about this all day. So thank you all so much. And I will actually don't know who I'm handing it back to. Harold, am I giving it back to you?
You can. uh, the Morgan is taking over the floor very well. Morgan, you
Great. Thanks, Morgan.
Thanks
And
a
thanks,
lot.
Harold.
I'm just showing my slide, and it will be Joachim first from SHONA. So Joachim, over to you.
Hey everyone, good to be here. My name is Joachim Ewechu. I'm based in Kampala and I work with a company called SHONA. We help we exist to build prosperity in East Africa, and we do that by working with entrepreneurs to build good businesses. And we define a good business as, well-run business that is sorry, I got distracted by the comment of speak up, speak up. We define a good business as a well-run business that is good for customers, employees, owners, the value chain, the environment, and the local communities where these businesses are based. And our work is about, our work is about identifying these entrepreneurs for building potential good business, guiding them through capacity building, backing them by investing in them, or introducing them to other investors, and then growing their networks, connecting them and growing their networks so that they're able to grow into good businesses. How we've been doing that, one of the ways we've been doing that is through what we call our programs. And this is where we partner with NGOs, development partners, corporates, and others to design and implement programs that help entrepreneurs build good businesses in East Africa. We have two main thematic areas currently. One is around sustainable food systems. So we have a portfolio of programs that are focused on helping entrepreneurs to build businesses that are contributing to a sustainable food system in East Africa. And then we have a women's entrepreneurship thematic area as well. So I'm going to dive into the RBF. Is that okay, Morgan? Which is our goal today. Our conversations around the RBF have been around what we've been trying to do, which is transition into a program as a product model, so that we're able to kind of grow our impact, work with more entrepreneurs, and attract more strategic partners. I mentioned the categories of partners we work with. And so one of the things we did for the RBF is identify one of our programs, which is the Nature Accelerator and Fund, that the RBF is helping us refining the model of that, focusing on improving the quality of that. And then the RBF is also targeting, and then we're using that as one of the ways to build our financial sustainability by attracting additional strategic partnerships around that, and our women's entrepreneurship program. So the RBF it's a 220,000 euro facility that has a technical assistance element as well. That's about 30,000 euros. And I'll explain a bit how we've structured it with the team at DGGF and iGravity. Next slide. Yeah, so like I said, we selected one of our main programs, which is the Nature Accelerator and Fund. It has a capacity building element, which is the accelerator, and it has a fund that is investing into businesses that are going through the accelerator program. And so we're refining this program and using it as a model for all the rest of the programs we're going to be using. And we're focusing on an increase in the technical assistance implementation rate, which is the primary way in which we're helping these businesses, building the capacity of these businesses. And then to track the quality of that, we're also measuring the number of increased investments from the fund into these enterprises. And then on the financial sustainability part, we're tracking the program true cost income ratio. When we started our conversations, we had realized that we had a bunch of core costs that were struggling to price for well, and also recover from a lot of strategic partnerships. And so tracking this program true cost ratio is designed to help us understand kind of the true costs and then be able to make the case for them. And then, of course, increase the number of strategic partnerships so that we're able to design more programs. And then the technical assistance element is focused on impact management and measurement, which also helps us, sell more of our programs. And then we have the learning that we're sharing with the other partners that are part of this facility. So on the program quality part, like I mentioned, we are focusing on the technical assistance implementation rate. Now, this is a metric we were not measuring before. And so some of the conversations we've had in designing this have been very helpful to identify that this was a bottleneck actually in the quality of our program. And so it was very helpful to have this. And so one of the things that was helpful through this facility was to reflect on where some of the opportunities to improve this. And so one of that was to grow our team by adding a new senior business analyst to help us, one, help build the network of experts that's focusing on delivering the TA. So grow that, widen that. But then secondly, help reduce the ratio of team to enterprise. So before we added this staff member, we'll look at a ratio of one person that's covering 40 enterprises. With addition, this person will grow, we're reducing that ratio to one person focusing on 20 enterprises. So increasing our focus, the focus that we have on each enterprise, which is contributing to the increase in the technical assistance implementation rate. We're currently on track. We've grown from where we were last year at this point, 0%, and we're already at I forget the number now. We're already at I think we're about 15% already of that. Then, like I mentioned, to know that this rate, that the quality of our program has increased, we're also measuring the number of new investments from the fund. And so we already have, our target is 15 enterprises receiving investment. And we currently have 3 already, and we're 3 months into the pilot. So we're expecting that to continue growing through the end of the year. The sustainability part, I mentioned the cost-income ratio. Again, we were having a challenge. There's some core costs like my time, our business development costs, marketing, M&E, finance, that initially we're not billing for well, because our conversations with our partners have been, the partner comes to you and says, we have $100,000. Can you run a program of 20 enterprises? And our response has always been, yes, we'll do it. But what we want to shift to is to say, well, $100,000 can only support 5 businesses, not 20. If you want to work with 20 businesses, then this is what the cost looks like. So having this cost-income ratio, understanding our costs, tracking our costs a bit better will help us better make the case for how much we're charging, and also control our profitability, which is why we're tracking this. So we're currently monitoring this. It's still early days, and we're hoping over time to be able to also reduce this cost-income ratio. Our goal with the pilot is to achieve 99%, so achieve profitability with that. And then, of course, we want to add a new strategic partnership. So like I said, we're transitioning from a program, or we're transitioning to a program as product model. We're using the Nature Accelerator and Fund as the ideal program for us to replicate. And so one of the things we're doing under strategic partnerships as well is to then take what we've done with the Nature Accelerator and Fund and then package that into a product that we can use to attract additional strategic partnerships. So that's one of the things we're doing here. And we're currently in progress over a few conversations we're having, and we're finalizing the design of what that looks like. And then, of course, lastly, the impact management and measurement. We're tracking some metrics before, but this is helping us go deeper and also help us better sell programs as a product. So I'll pause there on how we've structured it. I'm happy to answer the questions around the current structure here, but I'll talk a bit about some of our learnings and some of the benefits from this so far. I think the biggest has been shifting our focus a bit and sharpening our focus a bit on program quality, specifically the technical assistance implementation rate. We originally assumed that it was working well, and then when we kind of dived into the program and analyzed it well, we realized that there were a lot of engagements or assignments that were delaying to start, or were starting and not getting finished on time for the companies to be able to benefit and grow. And so tracking this has really helped us improve there. And this is a metric that we're looking at on a weekly basis to check how we're progressing with the implementation of technical assistance. It's even guiding our conversations with the experts we're working with and pushing them to accelerate their work, or reaching out to the companies to check in on what's going on so that we can improve this. And then this is also, for me, has been very helpful because it also helps us align a bit the quality of our program with the experience of the entrepreneurs. So they're now able to get timely quality delivery from us. The second thing that has been very helpful here has been becoming more data-driven. I think we were having conversations around our costs, how to improve those. But then the conversations we had, the team at iGravity and DGGF, and looking inwards into the model has helped us, of course, then add this element of being data-driven into our work. And so, I'm excited about some of the conversations we're having right now about our costs, conversations we're having right now about the time we're spending with businesses, conversations we're having right now around, like I talked about the TA implementation rate, and this has really been helpful. So this facility has helped us do that. And then lastly, we've been able to build our capacity. We've invested to deepen in our monitoring and evaluation. We've also added an additional staff to help us with business development as well. So that's just a highlight of our experience so far. It's still early days. We're excited about the next few months.
Thanks a lot, Joachim. So I think I will be next. So welcome also from my side. And we know it's a lot of content, so we'll try to keep it short, but maybe shortly on iGravity. So my name is Morgan Loisel. I'm an advisory manager at iGravity. And at iGravity, we believe in the transformative power of both entrepreneurship and partnership. So that's why we have been supporting entrepreneurs through our investment arm, but we have been also promoting partnership through our advisory work. So it has been really a pleasure to work together with DGGF and supporting them on their ambition to implement a multi-stakeholder initiative to support ESO. Just that you get a bit the context, because I think we forgot to put everything into perspective at the beginning. But one part of the project was really in running the RBF pilot. So it's what Joachim has been presenting. So we are running this pilot with 2 ESOs. So SHONA is one, OST is another one. And as part of this project, and to really build on the vision of DGGF, and Julia will tell more at the end of the session, we also performed research work. And the idea was really to try to understand a bit better the constraints which are faced by ESO, in order to identify leverage points and then entry point for a multi-stakeholder initiative. And today, so I will try to share the findings of the research. I think part of them were also already covered by Ariel, so I will try not to speak too much about the issue that are well known, but focus on this leverage point and the solution, so that also at the end, Julia and DGF can share their perspective. So quickly on the summary on the approach, and telling you a bit what makes this research piece special in our view. So what we did is that we used a market system development approach. And I think that was mentioned by Ariel at the beginning of the session. So these system changes are really important. And otherwise, having that integrated in the research piece was really important. And for the one which are not familiar with this kind of approach, what it means in super easy way is that with a market system development approach, you will try to address a development challenge. But what you will make differently, that you would focus on 2 main aspects, which are trying to understand the root causes behind an issue. And that was also mentioned by Ariel. So just staying at the symptom level doesn't make the system change. So really try to ask 3-4 times, why is it the case? Why is it happening like that? And try to focus on understanding these underlying constraints. And then another part, which is key in this kind of approach, is to try to understand the market dynamics. So instead of focusing on the ESO themselves, it's to look at the actors within the ESO system to try to understand how the system is performing and put a bit the performance of the ESO into perspective related to this market dynamics. And only once you have understood really well the root causes and the market dynamics, you can identify this leverage point. And again, there are a lot of ways of defining what is the leverage point. We're also unsure how to define it, but the way we have been defining it, it's really the factors which have the greatest degrees of influence on the performance of an ESO system. And now I will share a bit more on those ones. So starting on the root causes analysis, what we did is that we didn't start from zero. There are a lot of researches and knowledge on this part. So we used a structure looking at 4 key ESO system hurdles. So looking at the lack of financial sustainability, the human resource constraints, the insufficient data transparency, and the limited public-private collaboration. And we did our research work or assessment in 5 countries. So we look at Kenya, Senegal, Morocco, Vietnam, and Colombia. Again, those countries are not the focus of the program, but we look at ecosystem of different maturity, because what we wanted to understand is a bit how these different system or ecosystem are functioning and what are the constraints in different ecosystems to try to identify the entry point for a scale-up initiative. And one of the key findings was that at the end, also mentioned by Ariel at the beginning, most of the constraints that were identified, they were common across the 5 markets that we have studied. The only distinction was that in some markets, you would have one which is having a much more, or it would be a constraint materializing with much more important than in other markets. So to illustrate that, maybe an example. So when we look at the financial sustainability, so we realized that across market, there was this problem on the funding type. So with a lot of donor funding, short-term, and really restricted funding. But what we saw as a distinction between the markets is that, for example, in Vietnam and Colombia, we would see a lot more actors in ESO which are experimenting with what we called investment-linked type of revenue models. So really trying to add, equity stake in the company that they have been supporting, revenue sharing model, etc. So this kind of model, it was more prominent in some of the markets and in other, not at all something that we saw because it was much more donor-driven, etc. Another example is, for example, around the public-private collaboration. So around the commonalities, we saw that in most of the places we have been looking into, the involvement of the government was never really strategic and really short-term. Same, we saw really little corporates active in supporting ESO, so it was more anecdotic. But what we saw is that, for example, in Colombia, the government has been much more active than in the other market, and you could really see within the ESO system that it has been benefiting a lot the maturity of the ESO. So I think that we're seeing that we have seen. I will not go too much, as I was saying, on the constraints, and we're happy to share more reports if you are interested. Another key finding that we came across is that when you try to focus on one of the systemic hurdles and the underlying constraints, you will see that everything is interconnected, making it impossible to just solve one issue in an isolated manner. So for example, if we take again the issue with donor funding, so if a lot of the funding is coming from donors, short-term and restricted, it limits really the capacity of an ESO to invest in their staff, to invest in the data transparency, which results in a low program quality because you don't have the right person in place. You can't track your data, so you cannot really monetize your impact. So everything is connected, and that way it's unrealistic to pretend to address one constraint without solving the other ones. But really calling for this more systemic approach and collaborative approach. So once we had understood the root causes, we look at the market dynamics. And for that, we use this donut that everybody has seen probably. But what we try to understand and why it was really important is that, of course, when you look at the ESO performance, so ESO are the core, but at the end, their performance is linked to a lot of other actors. And what we did is that we mapped the different constraints to the different actors. So at the middle of the slide, you can see the core function with the ESO providing business development services to the enterprises. And for each of the function and each of the market, we try to understand what was well done and working and what were key constraints or issue. And we did that for all the functions, so not staying at ESO and enterprise level, but looking at also what we call the support function. So, who is providing financing to this institution? who is providing training, capacity building, who is collecting data or helping on data transparency, and what are all the advocacy networks. So now we have Pollinate Impact. Who are these other actors which play a key role in supporting the development and the performance of the system? And at the lower part of the slide as well, looking at what we call rules and regulation. So looking at the government laws and policy and the social norm, what is working and what is not working. And by understanding better who is doing what and how in each market the system is performing, it allowed us to identify really where to put an intervention with which actors to really unlock the changes. So I think it was really key to have these two different frameworks to come and identify the leverage points. And now we can move to the leverage points, because I think that's the key part or the most interesting part. So here again, the way we have structured the leverage point is that we look at these 4 system hurdles that we mentioned at the beginning, so financial sustainability, data transparency, etc. And we try to understand what was the one thing that was the key to that was key to solve, and what could be then intervention that could be put in place. And as you can see on this table, the way it works is on the left-hand side, we show a bit what is the system hurdle that we try to solve, what is the leverage point, and then what are potential interventions in the middle, which actors in the system they are targeting, and which actors could help us implementing this intervention. So it could look a bit complex, but I will try to illustrate, and we can take questions later on. So on the financial sustainability, what we realize is that the first thing that needs to be, or it's a combination of 2 factors that needs to be addressed so that the financial sustainability of the ESO is improving. So on one side, ESO needs to have better transparency on their cost, was also mentioned by Joachim. So cost management is key. And on the other side, once that is on track and well managed, you can already try to diversify your revenue stream. And we had the feeling that the combination, and it's what we heard in the 4 and 5 market, it's really the combination of the 2 that could unlock the changes. But how do you do that? And here we have listed 4 interventions. Again, there might be more. Those are the ones that we have identified and where we see the most potential. But again, it's not exhaustive. So one type of intervention could be to promote the mentoring for better cost management and revenue diversification. So that could be something that is put in place by a mature ESO that has done that in the past, and that could then support less mature ESO and really mentor them and coach them on it. And that could be, technical assistance to this actor to coach an ESO. Another model, and that is what we are doing now with the pilot, and that Joachim mentioned, is that to do this shift and to improve their financial sustainability, the ESO, they need to be incentivized to improve their cost management and revenue diversification. So that could be done through the results-based financing mechanism, where you will have targets. So as Joachim was mentioning, so we look at the cost-income ratio and really incentivize them to work on that and find the way to improve it. So we see a lot of potential with results-based financing. And then beyond working with this ESO, with this kind of instrument and with this kind of partners, there is also some work to do at advocacy level. So here, the meeting that we're having today and promoting the work that DGGF is doing, that will help also shift the mindset of other donors towards more outcome rather than financing input and activity. So this kind of shift could be achieved by supporting ecosystem building actors to spread the word and show what is working, what is not working. I will not go through all of them, but maybe now switch it to human resources. We see a lot of needs for more structured trainings and peer learning. So I think that is also something that we have seen that has started being done in some of the markets. This need for certification and training, certification, I think we can call it like that. But really a label which will tell you once you have been going through this training, you have a certain standard in place, etc. So that could be something that could be done with training and capacity building organization. There could be also some technical assistance grant to some local training provider, like local university, local NGO, maybe working with ESO. So there are a lot of models that could be explored. We looked and we came across interesting peer-to-peer network for ESO. So really putting different ESO of different maturity together in the same room and try to exchange on best practices. We looked at secondment. So that is also something that has been done. So exchange of staff between corporate ESO or ESO of different maturity. So there are a lot of models that have been tested into some market and that are working and could be implemented at a higher scale. Then quickly on data transparency. So here, one of the leverage points is really to improve M&E and data system in order to strengthen the ESO decision-making and investment readiness. And here again, to achieve better data transparency, you have to work with different functions in the system. So first, working with data collection and dissemination actors. So, having agreement between all the parties on what are the standards, what is needed to move the needles, what are maybe financial and operation model to make the data collection more viable, because we have seen that it's really costly. So who would pay for that and who can use it? So all the reflection around this aspect could be something that is also implementing or improving the whole functionality of the system. And more at ESO level, so how to make sure that the ESO, which have a lot of other problems on the side, have the right capabilities and some support to really put in place the right systems. And that was also something that we are trying to do with the LBF, with a specialized TA on the side, so that the ESO could invest in this kind of data. And last but not least, and I think here we touch upon some collaboration under the other categories, but how to work better with the government, how to make sure that ESO are convened in order to make policy recommendation or formulate policy recommendation with the help of maybe networks, etc. So here there is a lot of work that could be done, especially leveraging the learnings achieved on the other part, and that could also make big changes in the same, how to make sure that the different actors at local, regional, and global level are collaborating much more. So that could be something, by working with the ministry, chamber of commerce, or the city mayors, that could be things that are achieved as well. So I went a bit fast, but I hope I raised some interest for the potential intervention that we have identified. And I think with that, maybe I hand over to you, Julia.
Yes, thanks very much. I will be quite short. Thank you very much for joining us and for following us on our journey. As you will have seen from the recommendations, I mean, it's not like everything is rocket science and has never been done. But I work more in the investment sector, and I can tell you that stakeholders are much more aligned. They collaborate much more. They have all of these organized and structured way of working together, looking at pipeline together. When we support an ESO, we're often the only funder. So it's great because we're definitely additional, but we'd like to change that. And so that's maybe one thing to explain a bit how we are moving forward from here. If we can go maybe to the next slide, Morgan. So that basically what we would like to do is to be able to identify like-minded partners. So we do have quite a few on this call already, but we'd like to formalize a bit like this collaboration with like-minded partners to make sure that the sum of our complementary efforts actually do fix this underperforming system of ESOs. So we at Triple Jump managing the DGGF, we still have funding available to support ESOs. And I think that we will carry on doing that, but we'll definitely be extra conscious about, our support being in line with the recommendations of this report. And after that kind of, building, I don't know if it has to be called an alliance, a consortium, or a platform where like-minded players, can basically, we can have a roadmap where we see where everybody intervenes And then we exchange on what works and what doesn't. And so we do more of what works and less of what doesn't. And hopefully we basically, get to an ESO sector that is much more sustainable. So I put the link to the report in the chat box. Well, sorry, not the chat. The chat, the webinar chat. And also, please do reach out to me. I'm very proactive on LinkedIn. We would be really happy to, meet with other people who are like-minded that maybe we haven't identified just yet, because it is a small and a big world. But I think with that, I would stop here, because I see that there are a few questions. And I'm happy actually to take the first one from John, if that's okay. Jumping right away. So your question, John, thanks. You're basically, what are the results that are being sought? So I think in general, why we want to do result-based finance, like the two main things and that are actually interlinked is making sure that there is a quality of the service offering. So you see actually the level of outcomes and impact being really, at the best level possible. But at the same time, also working on the financial sustainability of the organization. You are asking us about like the specific metrics. So what Joachim presented are the specific metrics that we define to a very granular way to basically be able to see how we going in this. So if you want the two things like quality of programming and financial sustainability are our northern light, but then it's a discussion and when building the partnership that we agree kind of what are the specific metrics we want to look at, how do we define them, and there's even an incentive scheme, which means that I don't know if one of the idea that you want is, let's say, for instance, the cost income ratio that becomes better. So we look at the baseline and then we kind of set, if you do 30% better, let's say you get 30% of that payment. To do 100%, you get 100. So it's basically making sure that ESOs are rewarded to the level to which they basically perform. But every single RBF partnership kind of is based on an agreement basically between DGGF and the ESO, in this case SHONA, with the support of iGravity, who knows a lot more than us what RBF really, how it works, but kind of identifying these indicators that make the most sense.
Amazing. Thank you, Julia. And I think you touched on, there was another question that came in the chat from Judy, and I think you touched on it, but I'll just read it out. So Judy was asking, how do we ensure that we are really creating sustainable changes as opposed to just delivering results so that the financing comes through? So she's asking specifically, what kind of indicators do we have to show for sustainable change? So I don't know, Julia or Joachim, do either of you want to pick that up, or Morgan?
I think maybe it's nice for you, Joachim. I mean, you actually presented them, but maybe you can pick one or two where we really, thought for that, and then I'm happy to add a little bit, and Morgan can chime in as well.
Yeah, so I mean, like Julia said, first of all, it wasn't predefined metrics. We spent a few months going back and forth, focus on, okay, what's the right metric here? We took, we looked at the model. We together looked at the model, asked questions about different elements of it, and then arrived at this technical assistance implementation rate from that. And then set a few targets and then went back and forth. Is that the right target? Will it contribute to this? Until we arrived at, the T implementation rate. We defined it as well. That was very important. And for us, it's the number of completed technical assistance engagements against the total number of those that we want to implement with a company, right? So that was very important as well. And then set the target. So it wasn't, one of those where it's like, okay, here's the metric, and this is what it has to be. There was a co-creation to identify the right metric that worked for the program and for us. And that's really key. The metrics are very important, to your point, Judy.
And maybe to complete on that, and really on Judy, looking at to show sustainable change. So for instance, if you think of financial sustainability, I always say the same. So sorry for the ones who are on the call and who already spoke with me, but I think everybody got the memo 10 years ago that an incubator should have like diversified revenue streams. But then, we receive proposals, when an incubator has maybe 16 different revenue streams, but one of the revenue stream actually costs them more than what it brings them back. And I think that what is different, especially with RBF and in terms of thinking of sustainable change and financial sustainability is, yes, revenues matter, but costs also matter a lot. So exactly to the point that Joachim went a bit like in detail, this true cost income ratio is extremely important to work on. So that would be one thing. And I think, so it's not just about like financing coming true, but being able to also look at, how much does it cost? And also, again, like Joachim presented, it's my program is a product. It's a product that people believe in and that people will basically finance. And I think you can have many different ways of financing it, and entrepreneurs should contribute. I mean, there has been now so many research, and we did it also on our portfolio. Clearly, when companies contribute to a certain extent, they perform better. But then we also know that it's impossible to have a model where your enterprises, especially if they are very early stage, pay for 100% of the cost it takes to accompany them. But there are a lot of organizations that have an interest in having these companies develop and provide them with the right services. So that's why when we speak about like these strategic partners, and when in the case of SHONA, for instance, we have this goal of like one strategic partner, what does it mean? It doesn't mean like a grant for a year to accelerate 20 companies. It means like we're thinking long term, we're thinking, in the next 5 years, can you actually change a sector? Can you actually build a critical mass of sustainable businesses that would be interesting for other people in the value chain to actually work with? So these are a few of the specific elements we have.
Great. Thanks, Julia. And I can see some questions coming in. Great. From Keisha. Hi, Keisha. Hi, Devansh. Lovely to see you guys. So Keisha from She is asking, how do you strike the balance between encouraging the ESO to improve versus having realistic results? Maybe Joachim, do you want to take that one from your perspective? Or Morgan, I can also see you smiling. Open it up to you guys.
I think you can have the two perspectives, but maybe on our side. So I think it has been explained before. So it's really a process. When we choose the metrics, we always try to understand what is the baseline, how the company has been doing. So, it's really data driven. And based on that and based on our discussion, we also tell them how much they will receive of upfront payment. So we try to understand with the activity that they can pay, what can they achieve. And the idea at the end is not to penalize them. At the end, we just want to encourage them to work on the direction that we decide together and that is aligned with the strategy. So it's really pushing them and giving the incentive to achieve these results. So I think it's not, we don't want not to pay them at the end. So it's really a discussion, but maybe Joachim, you can share your perspective.
I was just going to add, I think when I look at all the metrics that we set, they were very aligned with kind of our thinking at the time on some of the issues we had and some of the things we needed to solve as well. So there's a high alignment there. There were not random areas to focus. This is actually where our heads were as well. And that's where our conversation started. And it was very helpful then to kind of explore those. For me, it was kind of selfish. It was like, okay, let's explore let's do this strategic, consultant to help us explore how to solve these problems. And then, we had metrics at the end, and then we have some payment attached to it as well, which is wonderful and great. So I think that's also very important. That there's it's aligned with kind of where you are, where you're going, what you're thinking about. I think there was a conversation we're having the other day about readiness for RBF. Are you ready for it as well? Which is, I haven't thought too deeply about it, but it's probably a factor we need to explore as well. But for us, it was the right time, perfect timing. The issues are the ones we're trying to work on and solve. And, I think we have a high level plan right now, and we'll see how it goes in a few months.
Awesome. And Julia, I see you have your hand up. So maybe you can comment there and then pick up Devansh's question, which is around the plan to sort of document these learnings and disseminate them more broadly, the ecosystem. So over to you.
Yeah, so just to pick up exactly on what Joachim is saying, I mean, we spoke with so many ESOs. We had so many webinars with the wonderful Pollinate Impact community. And that's exactly what Joachim is saying is, are you ready for that? Because what we provide, I think, I mean, we're not providing, you've seen the amounts that we provide. So compared to other ESO funders, we're really a small player. But what we bring is, yes, a little bit of funding, but it's the space, it's the resources, the moment that you can take to actually focus on these issues. And it's so hard, right, for an ESO because these are so fragile organizations. And at the same time, working with the entrepreneurs, if they do it, great. I mean, you know what an entrepreneur is, right? Like how many questions they have to answer every day. So they're very, very busy people. And so it's really hard for them to have the time to take a step back and think about these strategic issues. The problem is if they never take the time, they will never get somewhere. So I think it's really about, yes, this readiness. They just wanted to do it. I mean, the other organization, OST, I think I can just repeat what they say. They say, for us, financial sustainability is number one priority. So we said no to grants. Last year, they said no to millions, just saying now we have to focus on our financial sustainability. Otherwise, we won't get to the next 5 years. So I think that and yes, there is a plan to document the learnings actually in our little group. So with the 2 ESOs that are partnering with us for this pilot of about 1 year, we have quarterly sessions. And then at the end of this experience, of course, we would so I don't know if we want to evangelize, but if we do find that RBF holds the promise that it has for us to basically really help DSOs in a meaningful manner, yes, we will definitely come back and kind of, appreciate in which context does it work the best.
Great, thanks. And now we've got a lot of questions coming in. So we'll take a couple maybe at a go. So Kristen was asking if there are concerns about how results-based financing pushes all the risk on the ESOs, especially since, as Julia said, they're already fairly fragile organizations. Or how are you balancing that? So maybe we can start there. Julia or Morgan?
I'm happy to start, and then Morgan, you can maybe add. Yeah, it's not the idea, and that's exactly what, for instance, my committee who approves basically the funding that we allocate to different organizations. It's again linked to the readiness, and so what you can see is with both the ESOs we're partnering for the pilot. I mean, implementing their programs is covered. They already have a partner. What we do is additional funding basically to help them work on these strategic matters. And also we are providing, because I don't know why everybody is always jumping on us, result-based finance, but there is no prepayment. Yes, there is. We agree on an upfront payment to make sure that we don't put the team in jeopardy, but that they have a good basis to be able to go through the work that they want to achieve. And I wouldn't underestimate also that the technical assistance that we provide, with a team from iGravity is, it's very thorough, it's recurring meetings, and it's making sure that we make progress on all the things that we have so that if there is any problem, we basically see it early on and we can fix it pretty quickly.
Great. Thanks, Julia. Maybe I'll give the next question. I think, Morgan, maybe you can take this one. John is asking, what data is available from the study on the success rate of ESOs as measured by the growth or their enterprise clients, as opposed to the ESO's own financial sustainability? So is that something that you guys looked at in the study? And did anything come up about the for-profit versus not-for-profit model around ESOs and incubators that came from that study?
So we looked really more at the trend, and we don't see that there is one model better than the other one. But for us, the idea of the study was more to understand what is working, what is not, and what needs to be in place so that it works. So we don't have data and really trends that we saw on that. Yeah.
Okay, great. Thanks, Morgan. Then, just because I know we're coming up on time, we'll take Judy's question. she says, from the measurement point of view, since the kind of model being applied is very personalized with each partner, how do you balance between sort of following for quality results and changes and the very real battle of human resources and time and effort? How does that go in? I know, Joachim, you mentioned, deliberating on the indicators for months. So I don't know, Joachim or Julia, do you want to weigh in on it? I think it's a very real balance of effort and intention.
For us, it was helpful. So it was a good use of time, a good excuse to go think and reflect as someone who's analyzing and asking smart questions. So yeah, I really enjoyed the process, actually.
And really, it was a design process. So we looked at which kind of data they were collecting, because the idea was not to put on top of what they wanted to do an additional layer. So it was really looking, what are you collecting, where you maybe lack a bit of focus, and how we could use that to inform and show that you are moving in the right trends. So it's not that we created an additional layer. And because that was really part of the selection of the metrics, then the way we report it, it's quite smooth as well, because we use their tool and it's just structured and like they know what they need to report when, and that was agreed on before structuring and finalizing the contract. So there is no surprise.
Amazing, amazing. I think I'm sure either Julia or Harold probably want to wrap things up in the last couple of minutes, and I think we got through most of the questions. But thank you all so much for the thoughtful questions, and to Julia, Morgan, and Joachim for sharing your insights and experiences. I think this has been really enlightening for so many of us on the call. Harold, I'll give it back to you.
All right.
Thanks.
Thank you. There was one final question here about sort of how we all sort of tend to evangelize the learnings from the RBF program. So maybe Julia, Morgan, 1 minute to sort of tell you how you think you will keep the community up to date on your progress with this.
Yes, so we definitely value being engaged with communities like DCED, Pollinate Impact. So as we move forward, we will definitely, have more webinars coming up that basically, share what has been working or what has not been working. And then please really, if you want to reach out to us directly, do not hesitate.
All right. On the note, well, yeah, I think you heard that Julia is planning to build a coalition of those who work with ESOs and to make sure that the funding of ESOs is moving in a certain direction, because I think what we've learned essentially that how they are funded influences the business model, their HR, their data, their performance, and their orientation. So that change is critical to achieve. So if you want to be part of the coalition, I guess you'd be in touch with Julia, and she will hear, I guess, in the future how that's shaping up. For us at DCED, we are happy to continue the discussion here. Finance is a topic of growing importance, so there definitely will be also more finance webinars, also on other topics coming up after the summer. So thank you. Let's leave it here, and we'll all keep on continuing having this discussion.
Thank you so much, everyone.
Thanks a lot. Bye-bye.
Thanks, everyone.
Bye.